What's up? Stephen Johnson Stocks. This episode is my biggest loss of all time. And a few times I just wanted to quit after taking this, to be honest. But it's something that I will never do because I've come too far. And all I can do is think, what did I do wrong and how do I fix it? And I know what I did wrong. I basically lost all regard for discipline. Lost all regard for cutting losses, lost all regard for following a plan. I stopped really studying, I stopped watching the video lessons by Sykes and the webinars. Didn't really pay any attention to any guidance that he said about a changing market. And got a bit cocky, and I've paid for it, and it sounds mental, but I've put some processes in place to get better, and that's all I'll say. Because when you take a loss like this, you lose the confidence in yourself to know that you can trust yourself, and it's really difficult. So now I'm trading small, building processes and building confidence, and it's as simple as that. You'll see in the Excel, you'll see the trade, and I'll see you later. So how is this for a chart? Whoop, reset. You guys know I bottomed around 3, then bottomed around 4.2, 4.1, and then ripped up to over $1,000 in profit. And then I lost discipline, crashed, still had a failure of discipline. The problem hadn't gone away and crashed to further lower lows than I'd ever been. I'd lost 1,800 lower than I've ever been before. And it's pretty obvious why. I was not trading very much, having a high win percentage above the 60% and banking, making money. And then the market was hot in December, so I traded much more, but I still maintained that over 60% winning average. But when the market changed in January and February, or specifically January, I was still trading too much. Winning percentage went down and I just lost money because I was just getting into trouble with too many trades, and I should have been much more selective in a cooler market. So all I can really do now is think, well, I need to get back up to the high 60s and even the 70s. So I want to aim to be winning 70% of trades, and the only way I can do that is by profusely tracking stocks, going back to tracking the gap and craps, going back to tracking the first gap down day, which I will be doing and showing you updates to show that I'm doing it. And when I don't trade a stock that I'm tracking, or I lose in excess of $200, then I cannot move my account size up. So I want to be winning 70% of the time. I want to be taking no bigger a loss than $200. And providing I don't break the rules more than 6 times, 7 times going into the red zone, this should be yellow. And I've already done it once already since the big loss. Then I'll size up and I'll take a 400 max loss. As long as I'm hitting above 60% winning average and I'm not going into the red by breaking rules each month, then I'll size up to 400 max loss, size up to 800 max loss, depending on how I'm performing overall and providing that I'm overall green. If I'm not overall green on the weeks and the months, if I'm not banging in green week after green week, then obviously I'll stay at 200. But all I can focus on is sticking to these rules, sticking to this plan, profusely tracking setups. Because focusing on making this money back is just not going to work for me. I need to, well, it'll be nice to be like, oh, look, now I'm back to me max loss. Oh, look, now I'm next to 2 grand. I'll get there. I think it'll definitely be an overall profitable year, but there's no point focusing on that. I just have to focus on not breaking rules and improving discipline because I know the patterns. So this is AFMD. This is the stock that I am sure will cause many views and many conversations. But I really don't mind. I feel like it's a good lesson. And basically, I was buying the stock. If we go back a couple of years, the company is pretty shocking. It's from the 5s down to the 1s. So it's typical, got a really bad long-term chart. And when we look at 6 months, I was buying on this, I was shorting on this day. And I was playing, basically thinking, do you know what it is? This stock, it's got all of this resistance going back. It's a classic pattern that I play, thinking it's basically a gap and crap because it's gapped up from the 130s, really opening in the 160s, and it's got resistance up in the 190s. So I thought it's never going to break this resistance. But the one thing I didn't really discount is, even if we go back kind of 5 years, this first day was the biggest volume it's ever had in the history of the company. And that was one pretty bullish indicator. But I obviously didn't know that at the time. The volume pre-market wasn't so high. The other thing was it's a 5-cent ticker, which was something I had not really taken into account. But none of this really matters. The fact that it's a 5-cent ticker, I should have maybe gone smaller. The fact that it has resistance is very bearish. The fact that it's got a lot of volume is another indication of I should have not gone such big size, but I didn't know that the volume was going to come through. The volume more came through towards the end of the day. But the crucial mistake that I made, which cost everything, basically, and I will always play gap and craps, I will always short this pattern, I will always short gap and craps, I will always short resistance. The fundamental error that I made here was that I was shorting it on this first green day, gapping up near resistance. I was basically building a position in the 179s, 175s. I was short from the 175s. Its top was 185. It was opening down in the 170s, and then it washed out down to the 150s. 150 just, because it's a 5-cent ticker. Now, I was short again from the 170s, and I was at a reasonable position. I was up about $500 on this wash. But my fill for most of my shares was in the 150s, 145s, and 140s. And because I'd missed the fill, I got filled a tiny amount, and then it popped back up to higher day. I was thinking, I was just up $500. Now I am no longer up anything really. I'm back to break even. Like I was flipping up and down like a couple of $100 red, couple of $100 green in this area, and I was just like, I've got to cover it because generally if it washes a little bit and then rips back to higher days and holds, it's very bullish. So I cut it, but then I was annoyed and I was thinking it's got resistance above, and I held it. And I held it all of today, held, ripped up in the afternoon. Now it's down $1,000. Held it the next day, I was down $1,000 throughout the whole day. Then it closed higher, I was down 1,400. Then the next day when it ripped, I was thinking, well, it's got resistance above, so when do I cut? Because it's got this major resistance line. If we go back on maybe the 6-month chart, we can see this major resistance line all through the kind of the 2s, 2.5s, 2.10s. But the problem was when you're already down so much money, then I basically broke my plan. So if I was going to take a short into resistance in the 2.5s and 2.10s, then my ideal entry should have been 2, risking off 2.05, and I had a 5-cent risk, or 195, risking off the whole $2, cutting at 2.05. And if it breaks through 2.05 to a 10, I'm out. And I would have risked like 5-10%. But what I did, which was crucially wrong, and we'll have to go back to 10 days, is I originally shorted the gap and crap, which is fine, and it kind of would have worked if I would have took $80 and then got back out flat. For this one time, it didn't work. For me personally, the stock was manipulated, and it still is. But it doesn't matter. My pattern on the one time didn't work, but I wouldn't let it go that this one time the pattern didn't work. And then I had a new plan, which was to short into resistance in the 210s, but my average was the 180s. So by the time it breaches the 210s, I'm down 30 cents a share on what was originally a $1 plus stock, which is ridiculous risk. I should have been risking 2 to 205, in at 2, out at 205. So I changed the plan. I didn't have the correct risk reward for the other plan, and I got super stubborn and went in way too big, like $17,000. And it's a huge mistake. And I now know there's nothing wrong with the gap and crops. There's nothing wrong with shorting into resistance. Both times I would have risked a little and lost a little. The key was not to change the plan, not to get stubborn and accept that sometimes you've got to lose. And it's as simple as that. It was such a basic mistake of getting stubborn with a trade and not in changing the plan. And it's a lesson. Tough one, but it's a lesson. And that's it. I don't want to keep this video too long. I don't want to labor on it too long. I didn't want to make this video, but I felt like I owed it to you guys who followed me over the last 18 months. I owed it to you guys, and it's nowhere near over. I've got $1,000 at Trade Zero. I've got 22,500 at IB. In reality, I only lost a couple of thousand of my own money because the other 2 and a bit thousand was money that I'd made. Because I started with 25 on my 22, so I've really lost a couple of thousand in over the last 6 months. It's not anything catastrophic. So I will be trading it under PDT until I get over PDT. I'm not using my IB account until I've made the money back. I'm not adding in. I refuse. I will use Trade Zero for any extra trades, but even again, I'll be trading mornings, 1 trade a day, until I'm having my winning percentage really up above 60-70%. And if you want to comment anything, comment 70%. Otherwise, fuck it, it's a dejected Jeevan. And I'll be around forever, but there's a long way to go. And if anything, it shows that the process, it can be a lot harder than most people think.